Welcome back to an episode of Making Insight. I'm your host, Clayton, and today I have Adrianna Adams. And Adrianna is a certified financial planner with Domain Money. We're going to talk a little bit about planning for personal finance 2025. It's currently October 24th, 2024. We're 2 months away from the new year. And we're probably 3 months away from when most people give up on those New Year's resolutions. We want to avoid that with this episode. We want to learn about some financial tips that we could immediately start today that will set us up for a good 2025. Adrianna, please introduce yourself and let everybody know why you're qualified to be here talking about money.
Yeah, of course. Well, thanks for having me, Clayton. I'm really excited to be here and to share some tips. To your point, it's the perfect time at the end of the year to think about this. By the time January comes, I don't want to say it's too late because it's never too late to start, but you really want to have everything set up before you go into the new year. So I'm a certified financial planner. I can get into more of what that means, but really, I just help clients all day, every day, figure out their finances, figure out what the best course of action is for them, because there's really no one way to do things. You definitely have options. And so trying to figure out what the best route for people is one of my favorite things. It's a puzzle to me. So I have been in the industry for about a decade, doing different things at different firms. I've been in the traditional space. I started at an independent firm, and then I was at Morgan Stanley. And so I have seen a lot and kind of how the industry operates, but really what I'm here to do, or what I do every day, is just help people figure out their own money.
Cool, exciting. I think we should just jump right in. As we head into November, what are some things that people should be thinking about when it comes to their relationship with money that could impact some of the financial plans they should be setting up for 2025?
Well, I think you have to start with a really solid foundation. And in my opinion, the foundation for financial wellness is cash flow. People hate to budget, right? But I usually don't use the term budgeting, but it is the most well-known version of it, right? But you have to master your cash flow. So I always say this is the best end of year is the best time to set yourself up for January, right? So look at where you're spending your money, but also look at what money's coming in. So money in and money out. And then that can kind of be the foundation for where you start, because you need to figure out if part of your plan is adjusting income or expenses, or if that's all taken care of and it's more about figuring out what to do with your money. Does that make sense?
Oh, totally. Doesn't make dollars, though.
That was good. It does. It'll make you a lot of dollars if you have a plan in place.
So what I'm really curious about is like people's behavior around money. Do you feel like
Yeah.
a lot of the habits we have with money are developed really early on? And is it more so us being irrational with our money, or just is it like a psychological behavior that causes us to spend the way we do?
Yeah. So it's really interesting. I always say that I should have gotten a degree in psychology as well while I was in college, because more of my day-to-day job is the psychology of it rather than just the math and like the puzzle of financial planning. Obviously, you need that piece of it too, but the numbers tell one story, and people can all agree on the numbers. Like without a fact, people can look at the data and understand it, but how you react to implementing it, or if you truly buy into what you need to do and if it's going to work, is such a huge thing. I do think that our perception is kind of learned along the way, like learned at, a young age, or from your environment and maybe how you grew up with money or how your parents handled money. But I think the habits can be super different, right? So you might have one opinion on it, but whether you get like paralyzed and don't act, or whether you make like irrational quick decisions, that is something that might not be necessarily like learned early on. But I do think the core of like how you think about things is shaped before you even know to start thinking about money. It's just what you see, like you said, spending habits, like how you see your parents or others around you. And I've seen it in two flavors. So the first one is you pick up the same exact habits as you learned from your parents. And then I see the flip side where people do the exact opposite because they want to do something different and they didn't think it worked out very well, maybe, or they didn't have solid financial kind of understanding growing up or knowing what to do. So I see both sides of it, but it definitely is something that happens before you even know to start thinking about it.
Definitely. That makes sense to me. I know you mentioned cash flow and budgeting. How can somebody start to understand their cash flow, or what is a technique that they can use to start understanding how much money they're making relative to spending?
Yeah. So I think the first thing to look at from money in, so what money you're making, is understanding like if all of your tax withholdings and everything are set up, right? So, right, if you have like a big amount that you owe every year when it comes time to file your taxes, or if you get a big refund every year, then that kind of can determine maybe what money you're working with monthly. So I always like to take a pulse check. Now, you're not going to hit it right on the dollar, right? You're going to owe something or you're going to get a little bit back, but trying to even that out is really important. But once you have that understanding, I mean, you know, whether if it's just salary, or if you have commission, or if you have bonus, or maybe you're self-employed, obviously all of those factor into this. But once you kind of know what your net income should be on a monthly basis or even on an annual basis, the next step is to look at where your money's going. And I do this exercise all the time with clients. I'm a huge fan of using technology for this piece. It is painful to look through your transaction history and try to like piece this together. Some banks do give you like a summary of kind of different spending categories, so that can be really helpful. But there's a lot of apps out there like Monarch Money or Copilot, just to name a few, where you can very easily link up all of your accounts and see the snapshot super easily. And like Monarch is $15 a month, right? Now, if you're already in a deficit, you don't want to spend more of your money to try and figure this out. But I think that $15 is well worth it to see where your money's going. And this ties into actually one of my bigger philosophies of even if you don't have a cash flow problem, I take everyone through an exercise, or I recommend everyone goes through the exercise of looking at where your money is going, because you are probably spending money on things that aren't even bringing you as much joy as you think. And you could be spending it on more travel or more of what you love to do. And it's very easy to just spend money without thinking about it. So even if you don't have a budgeting problem, I highly suggest doing this at least once a year, so that you really have an understanding of where that money's going. And that can kind of, again, lay that foundation of what to do next after you've got the income and the outgoing money understood.
It sounds like a spring cleaning. It seems like
Yeah.
there could be things that just pile up and are clutter in your finances that shouldn't be there. Maybe they served a purpose in the past, but they continue to linger and be an expense that are no longer necessary.
Yeah, no, I love that analogy. That's perfect. And I do usually focus on cash flow if we didn't do it at year end. Spring is the best time because I feel the same way. It's like let's clean house and make sure that everything has a purpose.
I know for me personally, I was always somebody who had some sort of an idea on what I was spending and what I was bringing in, but my financial situation did not get better until I actually saw it on paper in front of my face, like tracking almost every penny or every dollar. So I imagine that that's really good advice.
Yeah, absolutely. You're right. And seeing it on paper. And then it also helps you see the progress because you can look month over month, right? Or year over year of where you're at. And has your income gone up, right? Or what have your expenses done? Has your net worth gone up? So I am a huge fan of documenting all of this in some capacity so that when you go to do the exercise again, you have a frame of reference, because otherwise you don't know if you're doing well or you're doing poor because you didn't document it in the first place as your starting point. So getting it on
I see.
paper or an Excel spreadsheet or something to give you that point of reference is definitely critical.
Now, I know you've actually shared a little bit of content about this with holidays coming up. For me, this is one of those times of the year where I feel like a lot of my money goes out of my pocket. What are some things that people should be thinking about with the holidays coming up, also going into the new year, that could maybe set themselves up for a healthy financial well-being in 2025?
So there's a concept called sinking funds. Have you heard of it?
No.
Okay. So you're probably familiar. It'll make sense once you hear it, but maybe the term is new. But so sinking funds are basically larger expenses that you have throughout the year that don't necessarily fit into your monthly budget, but we can force them into our monthly budget by, it's like the Christmas example that I gave you, right? Of if you know that you want to allocate $500 to gifts this year for, maybe that's everyone, maybe that's one gift, whatever it might be. If you have 5 paychecks left until Christmas, if you just set aside $100 every paycheck, then you'll have the $500 ready to go. And then it won't be as detrimental on your cash flow come December. But you can do this. I do this for so many things. So another great example is car insurance or homeowners insurance, whatever type of insurance coverage you need. If you pay this annually, you usually get a discount. So I typically recommend doing that. But let's say it's $1,200, right? And it comes out, let's say it's also in December, right? Mine happens to be in December too. So that's always like a double whammy come December. $1,200, right? So that's technically $100 a month. So again, every single month, or actually I did every pay, right? So $50 a pay twice a month goes into my car insurance fund. So then by December, I have it. So one of the best exercises you can do is just going through your annual expenses and finding all of the large one-off ones that seem to kind of derail you or give you anxiety when they're coming due, right? And setting up that same process for those. And then another way you can utilize some of the newer technology to enhance that is there's companies like for your high yield savings accounts, right? Or any savings account really, but a lot of them are starting to add this feature where you can bucket your money. So you only have one account. You don't need to have 10 different accounts. You can have one account, and then you can say that my target for the car insurance bucket in that account is $1,200. And then you can do a travel one, you could do an emergency fund one. So I recommend doing that too. So again, when you pull the app up, it's crystal clear how much you have towards those goals and what you need. You don't need to spend all of your time and energy trying to figure this out. So figure out something that works for you and then find the tech that can make it a lot easier on yourself.
So you're saying there's bank accounts out there that will allow you to basically bucket some of those expenses that you're planning for, almost branched off out of the checking account, that almost are like little envelopes that you can hide away cash in.
Yeah.
Is that a good reference?
It's the old school envelope method. Yes. I feel like everyone's familiar with that, right? So Ally Bank does it. So not all of them do it. And again, I could list off, but those are kind of the two big players in the savings account space that I know both offer the buckets. So that's a good place to start.
This is something I'm actually really curious about. I know I have family members and friends who when they sign up for a bank, it could be the bank that they're going to have for the next like 20 or 30 years. What is your take on always being mindful about the relationship you have with your bank and being open to exploring other banks?
That's a great question. So in today's day and age, there are so many options out there. And I think figuring out what is going to work for you somewhat long-term is important, because changing your bank far too often can just be really complicated, right? You've got auto pay. I do recommend automating a lot of this. So if you have everything set up on automatic payments or automatic bill pay or direct deposit, it can be really complicated. But I think you need to take a look at what the purpose of each account is. And this goes for beyond bank accounts. This goes for investment accounts, retirement accounts. Really hone in on what the purpose of that account is. For example, your checking account. This is basically where you're going to get your money coming in, and where you might have a couple of payments like a mortgage or your rent or something that you can't put on a card or something, right? So things that need to come out of that actual bank account. But that's really the gist of what you need your checking account for. Your checking account's not going to pay a high interest, right? You want to just keep enough money in there as like your little slush fund to pay your monthly bills. And then when it comes to your savings account, you shouldn't be doing a lot of transactions in there, right? You should really have that be the hub for where you're keeping your emergency fund, and then those annual payments that come out, sure. But you shouldn't need to be moving money in and out of them all the time, other than adding to them, right? So first step is figuring out how you're going to use the account, and then picking one that offers you flexibility and is low cost. Like bank accounts these days, you should not be paying high fees on your bank account. So I always caution that, right? And make sure that you're not getting like tricked into signing up for the premier platinum one that ends up costing you a bunch of money. But I think figuring out what your checking account needs are and then what your savings account needs are, and then picking a bank that aligns with those two things. And then you should be set for a while. But certainly technology will change, new players will come into the space, and eventually you may want to move things. But I think those are kind of the two things you need to look at. And it doesn't have to be the same bank, because in today's world, it's not the same bank. So your standard like Chase, PNC, those kind of banks typically don't offer high yield savings accounts. Personally, just have my checking account at my traditional bank that has an ATM that I can go to if needed, right? And then my savings account is in an online bank because they pay much better interest rates. So you've got two different institutions, and you don't need to have 4 accounts at each one, right? Just one at each place. Does that make sense?
Yeah, I'm like you. I also have a local bank, and then I have an online bank for savings, and I love it.
Yeah, that's the best strategy in my opinion.
You did mention something in there about having, I want to say you worded it as like 6-month like security fund for yourself.
Yes.
What I think about when I heard that is, majority of Americans are living paycheck to paycheck. Would you say that is one of like the first saving steps people should take before they even focus on like buying a home or investing in investment accounts, stocks, mutual funds?
Absolutely. It is another one of those core pieces of your finances because it will give you the stability to be able to do some of these other things like investing and taking risks. But you need to make sure that you have the money there, that if something happens, you don't put yourself in a hole needing to use credit card debt and things like that, that make it really hard to climb back out of in case of an emergency. So I always suggest you need 3 to 6 months as kind of the rule of thumb. I am a big fan of figuring out this number based on your unique situation. So I will say it kind of depends a little bit and it depends on your comfort level, but I think that you need to make sure you've got that foundational piece built up before you start adding to other types of accounts. And there is one exception on this is if you have like a 401k match or something at your employer, you could be leaving money on the table if you're not contributing at least like the minimum to get your match. So there are a few times where it might make sense to add a little bit to other buckets before your emergency fund is fully funded. So make sure that you kind of think through all of those things and you're not giving up other free money or leaving money on the table. But generally speaking, before you start plowing money into any type of investment or account that's locked up, like a retirement account, right? You typically don't want to touch that before retirement. You've got that liquidity piece so that you can confidently make other decisions about things that are more risky. And actually, I want to touch on one more thing because you mentioned before you buy a house, because houses can be far more expensive than we think, right? It's that you're not done at the down payment. You may need a new washer and dryer, or maybe something breaks within the first 3 months of being there. And so there's a lot of additional costs associated with it. So I think, while I think it's very important for everyone to have an emergency fund, it is even more critical once you become a homeowner or even like a car owner, right? If you have a car that is not brand new, that might need work or something at some point, like once you start having some of these other assets to take care of, you do need to have a little bit more of a cushion there.
Do you think most people think of their home as an asset?
So the funny thing is, it depends on what you had mentioned earlier of how you grew up and like what your thought process is, right? Ironically, your home and your 401k usually end up being the largest assets you own over time because you are forced to consistently, well, the 401k isn't forced, it's a choice. But when you pay that mortgage every month, like you have to pay the mortgage, right? It's mindless. And so the money goes out of your account and you're constantly building equity in your home. And it can be a huge asset on your balance sheet. But what I will say is you can't eat a shingle, right? So you can't look at it. Some people are like plowing money into their home or they're putting extra towards the principal right now instead of investing in other ways. Again, there's so many different kinds of analysis you could do on that, but I do think it's important to have like diversification in how you're building wealth because more often than not, if you have that home on your balance sheet as an asset, it's not going to be able to buy you groceries, right? You would have to sell the whole house. So there's other ways. There's, equity lines of credit, and we could get into all of that. But I think that post-COVID, like our generation has seen home prices appreciate a lot. So they do view it when they see their balance sheet, they want to see that equity in their home because it can be significant. So I think now more than maybe historically, people are looking at it as an asset on their balance sheet. To circle back to your main
Interesting.
question.
Yeah. Well, and I'll definitely save another episode in the future to talk about home equity lines. We could talk for hours on that, I'm sure.
Yeah.
No, but I think there's also something that you recently shared some tidbits of wisdom on relating to credit cards. What are some bad habits that you see most people using with credit cards that can be fixed pretty easily?
So it's not with a credit card, but it's along the same lines. The number one bad habit that I think is easiest to fix is using the buy now, pay later feature when you're checking out online, right? They make online shopping so easy these days. You can honestly even do it in person at some stores, the buy now, pay later. That is, I find more often becoming a trap than something helpful for people because it can continue to snowball and build up. And it's not top of mind. You're not seeing the balance every time you open your Chase app or whatever it might be. So I think saving up before you purchase it and do say it's almost like reverse buy now, pay later. So instead of saying, oh, I'll pay it off over 4 months, wait 4 months and set aside a little bit of money every month until you know that you can afford that thing if it is a little bit more pricey or something. But I am actually a huge fan of using credit cards wisely. So I think it's very helpful if you just put everything on a card if you feel like you can responsibly use credit. If you put everything on your credit card and then you only have to look at that one credit card every month to see kind of where your spending's at relative to like how much money's in your bank account, that can be a great way to fix it. Now, if you've got like 7 cards that you're using and you're using your debit card, I think that's where people can get into trouble too, of not really seeing it all holistically and understanding if they've overspent that month. So streamlining it and finding one card that really works best for you, that maybe has perks that align with your spending habits and things like that, but still taking advantage of getting those points and the perks and building your credit. And one other thing I'll say too is on that front is credit cards are a good kind of buffer from like a cybersecurity standpoint compared to your checking account. So it's also kind of good cybersecurity practice to use a credit card instead of using your debit card and having that bank account information be in a lot of places.
So you're saying there's a little bit more fraud protection when it comes to credit cards?
Yeah. Because think about it, it's not directly linked. You can link it up to your bank account, right? But it's not pulling money out of your bank account as if it was your debit card. And then there's also more flexibility and better from the fraud protection standpoint, like with credit card companies getting rid of a charge that was fraudulent, right? Where on your bank account, it's a lot harder to get that money back into your bank account, where the credit card company can kind of wipe it off of your card. So definitely, and especially around the holidays, with holiday spending and stuff, there's usually an increased number of fraudulent activity. So be careful and make sure that you're kind of staying on top of your charges as well.
Perfect. I would like to know a little bit about what goes into finding a certified financial planner or advisor to help people with their financial well-being.
Yeah. So the first place, there's a lot of ways you can go about it. I think if you are on the hunt, I get a lot of people on like the internet looking into this, right? Trying to find something. But I also think that this is a great opportunity to ask your network who they personally worked with, that they had a good experience with, or especially people that are like-minded like you, because I think the number one thing when choosing a financial planner is that they are aligned with you as a person and they are going to understand your values and what your goals are rather than just like the investment piece of it. So that really kind of ties into that whole financial wellness, right? And figuring out what that means to you, because it's not just like the rate of return that your IRA is earning, right? So the first thing I think that you need to figure out is, do their values align with you? And then I think also on the flip side, it's best to be really transparent in what you're looking for help with, because some people are looking for budgeting and cash flow and debt management. Some people are looking for, more advanced tax planning strategies or things like that. And making sure that if you ask those questions up front, you'll get a more clear picture of if that's something they can really help you with in their area of expertise. And that way you can understand before you get into some sort of commitment with them, that they're able to really help you with the goals you're looking for so that you end up with the plan that you were looking for. Because there's so many ways to do it, right? So I think having that understanding of what their values are and if they align with kind of what you're looking for help with.
Yeah, you mentioned values. I think values are probably something that people can consider over the next 2 months to really get into the new year and understand what values are important to them around their money. Are there any values that you can think of that maybe not all people should have, but they should at least maybe consider?
Absolutely. So the first one that comes to mind is simplicity. So I am a big fan of keeping things simple as possible, right? You do want to take advantage of things that might be a little bit more complex that will benefit you, but you don't need to have 20 investment accounts, right? That's just going to make it harder to manage. So that's something that I personally value, and that I know a lot of clients and people that I've worked with value as well, because it can get overwhelming very quickly. But then from there, really, it just depends on what your goals are, right? Some people value autonomy or the ability, to step back from work when they're 40, right? And like take a sabbatical or something like that. So the values piece of like, do you value travel, or do you value, maybe you're a homebody, so you actually do want to invest more in your home and you don't care to spend money on travel. Like those are things that really will shape like your financial plan and how you build out what you do. But I think simplicity is the one kind of route that I would say is beneficial to everybody, regardless of what your actual kind of goals are.
I feel like it's important for people to think about those values and then also vet their advisor or CFP to make sure that they're in alignment with their values as well. Do you ever see that happen, or is that something you'd recommend?
Absolutely. So the the process that we kind of have at the company that I work for, Domain Money, always do a session first to understand who you are and what you're looking for, and then figure out which CFP is the best fit for you. Because there are going to be like some different tendencies and opinions and things that shape how you look at money, how even a CFP looks at money, right? So I think it's super important to understand that going into it and making sure that it's in alignment, because financial planning is an art. It's not a science, right? There is one way to do the math. Like there's a right way of getting the numbers, but then from there are plenty of options. And if you're on a different page than the person you're working with, I think that there can be kind of some friction, and it's just more helpful to make sure that you're aligned going into it. And I think it's also important for couples. So this is, again, we could do a whole episode
Oh,
on like
yeah, that'd be a good
combining
one.
finances. I would love to do that. That's one of my favorite things to help people with, but it's really important to have couples answer the values questions separate. And then for me to figure out how to help bridge the gap and make sure that we're achieving both goals, because it's very rare that I have worked with couples that have the same core values and the way they think about money. It's hard to come by. So I definitely would recommend doing it as a solo exercise and then coming together if you are working, if you have a partner or you're married and you're looking at finances together. It's very important to figure out how they're going to blend together.
That's a good one. I would really love to explore that topic a little bit further one day in the future.
Absolutely. Let's do it.
Even for my own knowledge, I'm sure that's definitely something that could come up in my life.
Yeah.
So I actually just saw you put out a piece of content yesterday on the Cleveland Guardians and their payroll budget, essentially relative to the rest of the MLB. I thought that was pretty unique. Could you just explain that a little bit more here? And I may have a couple of questions to follow.
Yeah, absolutely. So I am fascinated. This is probably why I ended up in the profession I did. I'm just fascinated with the math and the numbers and money. So as I kind of mentioned on that, in that content, if I'm watching a show or if I'm watching a game, I can't help but think about like the money side of it, or like what a team makes, right? Or what the coach makes, or what their net worth is relative to what they make, and just like comparing different people in that, because it's just fascinating, right? There's nothing right or wrong about who has more, who has less, but it just really, really, I can't stop thinking about it.
No, I
So,
think it ties back into,
Guardian,
not to cut you off, but I think it ties back into the
yeah,
cash flow, because when I think about what somebody's making,
yeah,
I'm thinking, oh, there has to be something being made much higher than that that's paying them what they're
yeah,
worth. So
absolutely. So to kind of get back into some of the details, we lost to the Yankees in the ALCS. Very sad about it. The Yankees are a good team, but I will go on the record and say that I think the Guardians beat themselves. We made a lot of silly errors. I felt like we could have performed a little bit better. But if you look at the Yankees payroll on their, and this is for the active roster, right? So 26-man active roster doesn't include people who might be injured. So there's some discrepancies there, but their payroll is $260 million. So for 26 players, that's about $10 million a player on average. So you would have to imagine, have some incredible talent there. The Cleveland Guardians payroll is $50 million. So 20% of the Yankees payroll. Our players average $2 million per player, which is a huge discrepancy, right? But, and actually for one more piece of data, the league average is 100 million. So not only are we well below the Yankees, we're well below the league average. So very low on the list for payroll. But this goes back to the strategy of financial planning and why you need to have that game plan for your money. Because if you have a strategy in place, like the Guardians did, and a way to get yourself to the playoffs or to whatever that goal is, strategy can go a long way, even if you're not the one making the most money. So you could think of the person in, the person in the VP job making $300,000 a year, right? That's the Yankees. And then you could have the analyst who's making 50 grand just out of college. But if they're smart with their money and they know where it's going and they're actively setting aside some every month, they'll end up in a better position than the VP who hasn't looked at a budget in years and actually isn't really saving much money at all. So it all kind of ties together. And I also love like finding the connection to personal finance for all these money things. But I just thought it was a really great example of how that strategy and game plan for your money can really go a long way. But and follow-up questions, shoot away.
so it's not because the Yankees live in a city that just has astronomical cost of living compared to Cleveland.
I actually did take that angle as well. But their cost of living is not 5 times the cost of living in Cleveland. My company is headquartered in New York City. So I have coworkers there. We go to the city. And I could tell you it's definitely not 5 times the amount. So they're definitely still getting a significant bump compared to what.
Pretty funny. So with that, are there any current trends going into the new year that you think anybody who wants to be mindful about personal finance should be aware of? And this isn't necessarily like, oh, what's the next stock to buy or should I be buying a home?
Yeah.
But anything
Yeah.
around that.
So I have a couple of thoughts. The one that I'm seeing is side hustles are like, I don't want to say trend. I mean, it is trendy, right? It's people are finding ways to make more money. And one of my favorite things to say is that you don't always have to cut expenses, right? If you want to save more or have a different lifestyle, it could be about making more money. So something that I'm really intrigued by and interested in, and I spend a lot of time thinking about this and researching it, is how this like side hustle or just entrepreneurial spirit is kind of, I'm seeing it on the up and up, right? Compared to what I've seen historically. There's always been business owners out there, right? But figuring out what your skills are and is there something you can do outside of your day-to-day job to make extra money? And maybe it's a passion project, right? It doesn't have to always be about just increasing revenue, but I think people are looking for more ways to either add value to their own life from, again, something that they're really passionate about or care about, or helping make a difference somewhere else, or it may be a way to just make more money and help them kind of jumpstart their goals or save up for the house sooner, right? Whatever their goals are. But there's also a lot of different, and again, this would be a whole nother episode, but there's a lot of different things you can tactically do if you do have side hustle income or self-employment income. So that whole piece of it, I think we'll start to see a lot more of those types of kind of personal finance tips and tricks and like best practices come to light, because I think there's a lot more people out there looking for other ways to make money. One other thing though is technology is kind of an ever-changing trend, but I'm also really interested to see how AI changes all of this and is incorporated into it. So if you are kind of looking for things to stay on top of your finances, I think there's going to be a lot of interesting stuff come out. And like I was telling you earlier on the apps that just have more features now that can help you set yourself up for success. So keep an eye out for new things like that that might be able to just enhance your strategy a little bit.
How often do you use AI tools?
So in my personal venture, not very often, but at my company Domain Money, where I work as head of financial planning and I lead up the CFP team, we use it a lot more. So, and again, I am not on the technical side, so to speak, but like the engineers and our operations team and our product team is exploring so many different ways. It's so fascinating on how we can use this to enhance our technology and really make a difference. I shouldn't say all, but the vast majority of our platforms that we use are proprietary to Domain Money. And so the way that we can use the technology to make ourselves more efficient and then really make a better product for the end user. It's so exciting. It's so intriguing, but there's a lot to learn there. I love to learn about it, especially coming from not like a technical background, right? And just being in the finance world, but I definitely have my hands in it and I'm learning a lot about it, but not my area of expertise. I will tell you that.
Me too. I use it. I find it useful. Just curious, do you ever get worried about it becoming
So
too overused or reliant? And I
I think
understand
when
this
it
question
first,
goes a little off topic, but
yeah, that's fine. When it first kind of was becoming more popular and topic of conversation, I think I worried because I didn't understand it. And now that I'm learning more about it, which I think is this, again, I could tie it back to personal finance, right? If you don't understand what you should be doing or what your goals are, it's going to be very confusing and probably overwhelming. And people have that like, paralysis of not knowing what to do. I feel like it's the same thing with this technology and with AI. So the more that I learn about it and the more that I understand, you can see how far away we are from like AI taking over the world, right? Like it still is so reliant on humans today to make it actually something that's useful to us, that kind of thought has completely left my brain, right? And now it's just more of how do we use it in the right way? And I think it's going to help, I don't see it really even replacing a lot of jobs even in the near future. I think it's just going to enhance how we can work and how we can operate and what we can deliver to people. So I'm not worried about it, but I do know that there's a lot of, we'll see where it goes, right?
I was just genuinely curious. And going back into what you said about finding ways to increase revenue in 2025, are you aware of the silver tsunami that is, I guess, termed to be out there in America right now?
So this is, I'm not gonna lie, this is the first I've heard of this. Is this truly about silver, like the commodity, or is
No,
this something different? Okay.
no. The silver tsunami is a large concentration of boomers out there who own businesses and have nobody to hand those businesses off to. So they're eventually going to have to sell them or close them down. That's the silver
Okay.
tsunami as I know it. So I
Got
guess just
it.
going into, yeah, more of like the entrepreneurial type discussion. I do know if there are entrepreneurs out there, the company I work for, they like to educate business owners on how to scale and certain strategies on how to grow your own business or even acquire other businesses to grow. So I was just curious if that's something that's come up in your industry and if you had anything to comment on it.
Yeah. So it's funny that I haven't heard that term, but it is huge in the financial planning industry. And I don't know the stats off the top of my head, so we can fact check these, but it's something like, I think the average age of a financial advisor is like 57 to 62 or something. Like that's a very, very high average, right? So there is a lot of talk in the industry about what is going to happen when these older advisors uh, fully retire. There's actually like a trend in the industry where advisors like never really retire, right? They do hire like support staff and then they just kind of keep it going for a long time. But I do think that there is a very real kind of transition. And I think actually the way that I operate and am positioned is I like to think a really great opportunity because there's going to be a huge transition of wealth from generation to generation, right? As everyone gets older and passes on wealth down. And most people who are near my age do not want the traditional financial advisor relationship that maybe their parents had. So I think there's a huge opportunity to come in and have a new viewpoint or a new way of doing things that is super powerful. So that's a little bit different necessarily than maybe other industries, but I do think that if you have an idea about how to do something differently now is the time to do it. And then as these older generations retire, whatever industry it might be, there's probably going to be a really great opportunity for you to kind of slide in and really make a name for yourself and make a difference and change the way they're doing things, because I think that we can be a little bit more innovative and open to different ways of doing things because we are new and we haven't been doing it for 40 years, right? Does that make sense?
It does. Would you say that's something Domain Money is trying to accomplish, changing that perspective that most people our age maybe have about financial planning and taking on advice from a advisor?
Absolutely. So that is something that we talk about all the time. One of the things too is in how we charge for our fees. So you're probably familiar with like the asset under management model, right? And that's where they basically take a percent out of your accounts every month or every year, right? We have a flat fee model where it's like project based, right? Like you pay for a financial plan. If you want more time, like you can pay for more time, right? You can do a coaching session, things like that. But I think that also is really enticing to this kind of next gen, right? Because they want super transparency on how things are going to operate. And also, I think the way that Domain has positioned our services from even just the financial planning standpoint, we focus on your values and what you're looking to accomplish. And we focus on all the different financial planning pieces. So rather than it being investment based and then, oh, if you have financial planning questions, we can answer them. Our core is financial planning and investments is just one piece of that. And I think that's really critical when you're younger and you're trying to save for a house or you're trying to figure out if you should lease or buy a car. Like these are questions that people have that the traditional model might not have been able to really answer very well. So I think that the way that we look at things from that perspective and just our model in general is positioned very well to help kind of people like you and I.
So it's really important for somebody to almost be very open with their planner, not try to hide any
Yeah,
bad financial habits, because that almost like can be very negative towards the outcome that the financial planner is trying to achieve for you. I feel like it's like
absolutely.
showing up to a therapist and not telling them all of your
Yeah. Right.
red
Right.
flags, you know,
Yes.
just
Yes.
as much.
We have such a focus. Oh, go
Uh,
ahead. I was just going to say we have a big focus on judgment-free financial planning because that truly is the only way to really set yourself up for success, right? You need to feel comfortable and able to unpack all the baggage, right? And say, here's what I'm working with. How do we make this better? And if I'm only looking at one piece of the puzzle, then you're not going to get the same recommendation as if I would have seen everything all out on the table, and had been able to look through it all with a fine tooth comb and really get you set up for success. So you definitely have to come in good open.
well, I'm glad you were really open about all of these tips. I would like to learn a little bit more about your background and what got you so passionate into helping people with their financial well-being.
Yeah, absolutely. So when I went to college, I started as a corporate finance major because I knew two things. I knew I wanted to make a lot of money and I knew that I was good with numbers and Excel. And I was like, well, that seems like a good fit. I didn't know that there was an industry for personal finance at the time, right? That was kind of the only thing I knew was corporate finance. But ironically, my first internship that my advisor in college had recommended was a personal finance internship with Charles Schwab. Everyone's probably heard of them, right? They're one of the biggest players in the game. And so I went down to Florida for a summer, which also I was like, absolutely sign me up, right? Like I'm in Cleveland, Ohio. I went to Akron actually. So I was in Akron at the time. And I was like, going down to Florida sounds great. So I went down there and again, not knowing really a single thing about personal finance. And everyone around me was talking about Roth IRAs. And I was like, what the heck is a Roth IRA? And why don't I know about this? And they were like, it's tax free, like all the benefits of a Roth IRA, right? And I was like, oh my gosh, this is fascinating to me. And I kind of realized corporate finance, you don't really get to talk to people a lot. And I always enjoyed socializing and, working with people. And I was like, wait a second, this might be like the perfect intersection of what I was looking for. And I realized really like the driver was that I realized how much information there was out there and things that you could be doing that I had never even heard of. It was a foreign language to me. And so I knew for all of my friends and family, it was a foreign language as well. So I was like, I could really make a difference if I could learn all of this stuff and then teach everyone else about it. So it was the Roth IRA. So all of my Schwabies that I interned with, if any of them make their way to this episode and hear it, I think it was Beatrice and Brandon. I remember telling me about a Roth IRA, and then that's kind of where it took off from there. And I just became kind of obsessed with personal finance. And then actually, I went back to school, and my college happened to have financial planning as a major. So my degree is in financial planning. So I immediately switched to that. And then I don't know if many people noticed, but we basically had a financial planning team, like the mathletes, if you will. And I would just go around the country, like doing financial plans and like competing in it. And I just, again,
No
from there,
way.
that just like solidified my love for it. Yeah. So then I was like, I found the right industry. Like, this is for me. So that's kind of how I started, I guess. I don't know if you have any questions or if you want me to go into kind of my early career too.
So after Charles Schwab, you made your way to Morgan Stanley eventually, right?
Yeah. So before Morgan Stanley, I'll give you a little bit of brief intro. So my very first job out of college was at a small firm in Cleveland, an independent firm that probably no one outside Cleveland would have heard of, but they were very financial planning focused, which was a perfect fit for me because again, I was definitely like the planning, like the puzzle pieces. That is what I wanted to do. And so I spent like a year and a half there kind of learning about the client experience and how all of this worked in real life, right? Which is very different than by the book sometimes. And from there, then I found my way to Morgan Stanley a little bit later because I was kind of ready to full disclosure. So I came into a program, I already had my CFP out of college because my degree was in finance. So you usually have to have 2 more years of like CFP coursework before you can get your CFP. So I did come out, I guess, a little bit ahead of the curve, if you will. So I was ready to move very quickly. And this firm had a very specific kind of track record or training program of how they brought advisors up, which they have and in hindsight, looking back, they have one of the best training programs. I actually ended up hiring another financial planner that I didn't know. We never crossed paths there, but I hired them for Domain after their experience there. And I can attest that their training is still top notch. So, but I was ready to like move up and move a little bit faster because I felt like I already had all of like the CFP knowledge, right? And so I was just looking for kind of another challenge basically. And I met a team at Morgan Stanley and it just seemed like a great fit. So I joined the sorter group at Morgan Stanley out of the Cleveland office. And they really taught me a lot about all of the investments. And I was working with really a pretty significant, or I would say like a high net worth group of clientele. So I learned so much more that was above and beyond the traditional things that you learn about financial planning, that's so fascinating right there. Once you get up to that level, there's so many different strategies and things that kind of layer in at that point.
I have a
But
question
during
about
my
that.
time there, yeah, go ahead.
Would you say there's an attitude or mindset about money that the high net worth have that maybe the not high net worth don't consider or maybe make judgments on?
So ironically or strangely enough, no. I see the same attitudes or perceptions in young people with no money as I do in rich people with a lot of money or high net worth people that it's across the board, right? So we were talking earlier about like there's, the fear of people who are afraid to act, and then there's the people who are like kind of don't even think about it and end up overspending and things. Those same characteristics translate into the high net worth space. Like having money does not change that. It's truly like what's at your core that affects that more.
So what took you from Morgan Stanley to Domain Money?
So I had just started kind of working a little bit more. Well, not just started, but at Morgan Stanley, we did start to work with a lot more of the next gen clients. So a lot of our clients' kids and helping them like set up their first investment account and kind of getting them familiar with financial planning and investing and things like that. And I really, really enjoyed that. There was actually a specific, for confidentiality reasons, I won't say any names, but there was a specific family that I worked with, and they had 4 daughters, and I would meet with all of them. And I'm one of 4. I have 3 sisters. So I just really like resonated with them, and I loved helping them like they were literally my sisters. And I was trying to help them figure out, like, again, buying their first home and things like that. And I realized that all of the other people, though, who didn't have parents that were clients of Morgan Stanley, I couldn't help them because they didn't fit the model. They didn't have the minimum required assets to come into Morgan Stanley. So I was like, how can I help other people like this that don't have parents with a relationship with a financial planner already? So I was starting to kind of think about it. I was helping a lot of my friends on the side, right? Being like, come over and I'll help you get your E-Trade account set up, right? Or like I'm literally at dinner or like at the bar, like opening a high yield savings account with my friend, like on the app on her phone. Like I was just doing like whatever I could to help
I love
people.
it.
And then the CEO of Domain, Adam Dell, had reached out to me, and I remember getting like a message from him, and I wasn't sure if he was trying to pitch his product to me to use it as a financial advisor, or if he wanted to like potentially hire me. So I took the meeting just very curious about what he was doing after like his first message about kind of lay of the land of what his goals were. And it was just like the perfect timing, like the perfect storm, right? I was already kind of thinking about it over here and like trying to brainstorm like a way that I could maybe do this in some capacity at some point. And then when he kind of presented his idea, and I was like, that's exactly what I'm trying to do and what I want to do. Also, like, this is just, it's a great fit, right? And so the rest is kind of history from there. And then I just jumped in. It was definitely a scary time, like leaving like stable corporate world and jumping into a
Right.
startup company. But it's taught me so much, and I just have learned so much in that experience, personally and professionally. That's been great.
That's wonderful. I actually recently went through a similar transition, and I work with a team, and it's really, the energy it's startup energy, kind of like what you told me you were
Yeah.
working around. What are your thoughts on it? Is it something that you enjoy?
Yeah. So I do really enjoy it because I feel like I've been able to find ways to grow that I didn't really think about as just being a, traditional financial advisor. So, from ending up leading a team very early on at Domain and growing that team, hiring and managing the team of CFPs, to helping with marketing, to working with engineers that I had never had experience with before. Like I know all these words now that are part of my vocabulary that I didn't know 2 years ago, right? Like UX, UI, like, did we QA that? Like all these things where I'm like, what? Like I had no idea going into it. So I really have enjoyed that aspect of trying to challenge myself and figure out like ways that I can just learn new skills. And again, it honestly happens like overnight or without thought, right? Like you're just in a startup world, you are thrown into it, and everyone kind of has to pick up the slack or do whatever they can when they can. So it was a really great way to build all of these skills because I didn't have to think about it, right? It wasn't like, oh, I'm going to go learn how to do this. It was just kind of baptism by fire, right? And all of a sudden you're learning a bunch and you are figuring out more about yourself and how to work with people and all of that. So I really enjoy kind of the madness of it all.
Are there any qualities or values that really stand out from your leadership that have taught you something about just this type of work?
Absolutely. So from the CEO, Adam, he will do whatever it takes to win. And he thinks outside of the box. And I just feel like there's a lot of times where, again, in this traditional space, you're kind of taught to go and stay in one lane and do it one way. But hearing how other people think about it and just his perseverance to pivot until something works, right? And make sure that he's kind of doing whatever he has to win for his team is really inspiring. And then our chief financial planner, Katie, she is so compassionate and cares about her people. And I'm actually listening to another podcast right now about if you've ever listened to Acquired, they have the episode on Starbucks. And it's about how it's a 3-hour episode, so buckle up. But I would highly recommend listening to it. But they talk about how taking care of your people will take care of everything else, right? So from the top down, right, they take care of all of they call them, I think, partners rather than employees, right? So they take care of them. And then in turn, all of their workers take care of the customers at a different level because they're really happy and like happy to be there. And then the customers take care of the shareholders because they keep coming back for more coffee. And I feel that from Katie a lot with how she makes sure that everyone on the team is okay and is, getting professional development and what they're looking for out of their career and also has the tools they need to help the clients and how it all kind of fits together. So I think that they are very different people and they bring very different things to the table, which is another great experience I've had of just having, people from all over the world on my team or the company and just getting a different kind of flavor from everything. But yeah, I would say Adam's determination to win and Katie's compassion for having a good culture within the team.
That's something I like to hear. I really resonate with that. I came from an organization that was woman-led and very culture-driven, and they put so much time, money, and attention into their people. And I have my eyes and ears into so many businesses and like holding companies that their purpose is their people first before profits. And it's just incredible that the type of growth that can happen when you put your people first over money.
Yeah.
So just a simple observation for me. And I think it's really cool to hear that. It's good that you're in that type of environment.
Yeah, absolutely.
All right. Well, I want to make sure that you at least get a little bit of the sunlight left that's in this setting sun of soon to be winter Cleveland. I would really appreciate you coming out of the podcast, sharing a little bit about yourself and anything that it could be helpful for people who are trying to improve their financial well-being. Is there anything that you would like to leave the listeners? And with that, please share where they can find you off the podcast.
Yeah. Oh, if I could leave one thing with the listeners, this is going to be very basic, but I just truly believe that it's the most impactful thing you can do is that if you don't have a plan in place yet, or you don't know what your next step is going to be, set aside a little bit of money every month. Like even if it's, $50 to start from every paycheck or whatever it might be, build that muscle even while you're trying to figure out what your plan is, because that's something anyone can do, right? Everybody can put aside $5, $10, whatever it is aside. So start there and then listen to this episode again and look through all of the stuff we talked about cash flow and figuring that out, because that's your next place to start. But if you are just trying to figure out like one thing you can do today, I would say set something up on an auto save plan so that you've got your money working for yourself and you're paying yourself first. But you guys can find me on Instagram at Advice with Adrianna. That's where I share all of my content right now. I have some exciting things that will be coming hopefully for 2025, doing a little bit of goal setting myself. So more to come from there. But if you do want professional help or you need a place to turn, Domain Money has a great offering in different tiers that kind of fit different needs. So I would start there, but definitely start with a CFP if you're looking for professional help. But I still work with clients today, so you can work with me if you want. But our team is great. But yeah, Advice with Adrianna on Instagram, or check out Domain Money if you want a little bit more help than just some personal finance tips on Instagram.
I thought of one more question.
Yeah, go for it.
What is a finance book that you would recommend and that you love yourself?
Ooh, that is a good question too. So I would say The Psychology of Money is the one I'm going to tell you. And then I think that people, have you read it? Yeah.
Yeah, that's pretty much like what a lot of my questions were based off of. I'm like, how can I tie it? I love that book. And
Yes.
yeah, for real.
That it just, like we were saying earlier, like between you have to balance the psychology of it with all the numbers and everything. And I feel like that book just gives you a really good insight into a lot of that. And it's just, again, it's fascinating to me. I embarrassingly haven't seen it or read the book yet, but I just bought Moneyball. So that might be my next recommendation. I'll
Okay.
report back after I read that. But yeah, Psychology of Money is great.
Nice. That makes me happy to hear. Yeah, I've read some of Morgan Housel. He's the author. Some of his like blogs
Yeah.
and other writing. He is a really good storyteller. So
Yeah, absolutely.
well, awesome. I thank you so much for being on here again, Adriana. I definitely know some of the topics we covered. I feel like we're good, but they also could have been very general. I think we could have spent like a whole episode going into cash flow and even into
I
more about
know.
psychology. So maybe we can do it again one day.
We could, yeah, we could do like a monthly money series or something. Let me know. I'd be
Don't
happy
tempt
to.
me. Well, perfect. Thank you again.
Yeah, of course.